It's the worst day for the stock market in the past 2 years. The disappointing U.S. jobs report and Japan's recent interest rate hike are creating a domino effect as stocks fall worldwide. The tech sector is being hit especially hard, and U.S. crude oil closes at a 6-month low. NTD's Melina Weisskopf reports.
Moments after the opening bell, a steady decline in the stock market, although now indices recovered a bit from their session lows. The Dow plunged 2.7%, the S&P 500 fell 3.2%, and the Nasdaq Composite sank by 3.7%. A sell-off, some say, is a natural reaction to the disappointing jobs report last Friday and overvalued investments in the tech sector.
That got people worried that the U.S. economy is slowing down more than anticipated.
114,000 jobs were added last month, way below expectations, coupled with an unexpected increase in the unemployment rate, 4.3%. That's the highest rate since October of 2021. While fears of recession loom, some say we're not quite there yet.
Might show GDP growth in the U.S. less than 2%, but that's not the end of the world. That's modest growth. We don't expect that recession.
The unfavorable outlook of the U.S. economy caused a domino effect around the globe, hitting Japan the hardest. Following the Bank of Japan's rate hike, the market in Tokyo experienced its biggest drop in Japan's history. The Nikkei 225 index of leading stocks in Tokyo lost a staggering 4,451 points.
Japan is definitely the market being affected the most, but there are also other tech-savvy markets such as South Korea and Taiwan also suffer a bit of the loss after reaching the new high in the past few months.
Monday's plunge seen in the tech sector specifically. Nvidia, known for its computer chips and AI supplies, was down 6%, and Apple fell almost 5%. Jobs in the tech industry are also down. Over 100,000 tech jobs were cut so far this year. Even amid the economic uncertainty and global sell-off, analysts are advising investors not to panic.
I would say be careful about selling too much, simply because this may not last. If, however, we see very serious indications of recession,
the Federal Reserve has maintained an elevated 5.5% interest rate, and some are calling for an emergency cut. Others say an emergency isn't needed since the Fed says it's prepared to cut rates in September. Reporting from Washington, D.C., Melina Weisskopf, NTD News.